more confident to say I think that we're in a kind of a bottoming zone rather than trying to call it a bottom tick, which is that I think sentiment's washed out. I think a lot of leverage is washed out, and fast money is elsewhere. I mean, it's into the AI trade, and even that's kind of facing issues now, but that's elsewhere. And I think that the pendulum will shift back. I'd be surprised to see us go like, below like a 50 handle, right? Yeah. So I think the downside is more limited and the upside is multiples in the years ahead. But I do think it'll still take a little bit of time to dig back out of this and build kind of positive momentum.
Something strange happens when an asset stops responding to bad news. The headlines get uglier, sentiment gets darker, leverage disappears, traders move on to the next hot narrative, and yet the price refuses to collapse. That is precisely the kind of environment Lyn Alden believes Bitcoin may now be entering. Not necessarily the exact bottom, and certainly not a guarantee that volatility is finished, but what she describes as a bottoming zone, a period where much of the speculative excess has already been flushed out, and the balance between risk and reward may be beginning to change. And Alden sees another important shift taking place beneath the surface. The fast money that helped drive previous market moves has largely migrated elsewhere, particularly toward artificial intelligence. But if that trade begins to lose momentum, capital does not simply disappear, it can rotate. And Alden believes Bitcoin could eventually benefit from that rotation, especially because some of the biggest potential buyers may not even have entered the market yet. Corporations, ETFs, wealthy investors, and highly portable pools of capital could become a much larger source of demand in the next phase. That leads to an even bigger question. What happens when Bitcoin stops being viewed primarily as a speculative trade and starts becoming a form of portable wealth for people who increasingly want control over where their capital sits? Because Alden's argument goes far beyond the next Bitcoin move. She sees a potentially enormous untapped market among high-net-worth investors, while also maintaining a long-term bullish case for both Bitcoin and gold, two assets that solve very different problems. In this video, we're going to break down Alden's case for why Bitcoin may be closer to a bottoming phase than another major collapse, why the next cycle could have a very different demand profile, and why she believes Bitcoin's portability and scarcity give it a potentially enormous addressable market alongside gold. If you find this analysis valuable, hit the like button, subscribe to the channel, and turn on post notifications so you don't miss our next market breakdown. And let me know in the comments, do you think Bitcoin is already in its bottoming zone?
So in the last cycle, I think one of the more disappointing aspects was that the retail bid was weak. And it really was the corporate bid. Now, I actually think that the corporate bid is not done yet. Kind of like how, Strategy, that was their second cycle. So it wasn't like it was a totally new bid. So that was the ETF and the treasury company bid. Like I said before, I think the treasury company fad has peaked. But I do think some of the existing incumbents will be sizable buyers in the next cycle, most likely. Same with ETFs. I think probably an underappreciated element is the high net worth element, including some of them being somewhat self-sovereign in a sense, which is, anyone paying attention to New York right now, for example, like people with their fairly large investment properties got kind of doxxed. Basically, and are facing potentially selective taxation on them. And I think around we've seen capital migration out of California, and Europe has their own different things going on. And so I do think that the high net worth kind of portable capital area is bigger than people think. People also point out, not every millionaire in the world can have one Bitcoin, just numbers wise. So that is a gigantic bid that has not really shown up. And I think that the more either capital controls or real estate specialty taxes and things like that, as they ramp up, as the whole West is pretty much in fiscal dominance. We see it both on the right and the left. Like I mentioned New York, but we have, the president talks about sometimes basically price controls. Taking stakes in companies, telling companies what they can or can't do, obviously tariff policy. So this can come from multiple directions. As the country enters fiscal dominance, you get more of these things popping up. You don't just have this kind of hands-off, private sector can do what they want approach as frequently. And so I think the appreciation of just portable liquid capital is compelling. And narratives feed on price sometimes. So sometimes something stops going down on bad news. And then, traders say, hey, that chart doesn't look like dumpster fire anymore. Maybe I might allocate to it. And then momentum traders come in and say, hey, this thing's actually going up. Maybe I'll buy it because it's going up. And then when it goes up, it has another news cycle. And then you have more property taxes kick in. And then you have people say, maybe having a non-zero amount of this asset is not a bad idea. And if someone's worth 10 million or 100 million, non-zero could mean, $1 million of allocation. And there's tons and tons of people like that out there, or smaller, other kind of entities. So I think that's still a untapped market, either for this cycle or the next cycle.
Are you mainly bullish, or do you think we have likely bottomed here?
I think likely, but I think I'm more confident to say I think that we're in a kind of a bottoming zone, rather than trying to call it a bottom tick, which is that I think sentiment's washed out. I think a lot of leverage is washed out, and fast money is elsewhere. I mean, it's into the AI trade, and even that's kind of facing issues now, but that's elsewhere. And I think that the pendulum will shift back. I'd be surprised to see us go below like a 50 handle, right? Yeah. So I think the downside is more limited and the upside is multiples in the years ahead. But I do think it'll still take a little bit of time to dig back out of this and build kind of positive momentum.
Alden's point here is subtle but important. A market does not need to immediately explode higher for its underlying setup to improve. Sometimes the first signal is simply that sellers are becoming exhausted, when leverage has been flushed out and speculative capital has moved elsewhere. Bitcoin can begin forming a base without attracting much attention, and if price eventually starts holding up despite negative headlines, that can itself become the catalyst for the next wave of buyers. But Alden believes the more interesting story may be what happens after that stabilization. The previous cycle was heavily associated with ETFs and corporate treasury buyers. But she argues that the corporate bid may not be finished. Some existing institutional players could become significant buyers again. ETFs could continue accumulating, and an even larger pool of wealthy investors may still be sitting on the sidelines. Her argument is that this portable capital market is vastly underestimated, and fiscal pressures could make it increasingly relevant.
I've been a dual bull on gold and Bitcoin since I got into Bitcoin. I mean, I was bullish on gold before I got into Bitcoin and remained so. And so I do see that people that kind of view it as all in might be questioning that, and that might be a reasonable thing to question. I mean, when you have 100% of your net worth is something that swings this much, I mean, people do get burnt out eventually. Whereas if you kind of diversify to a handful of things, it reduces that. I think that, part of going back to my structural bear view on the broader crypto space is that I do think liquidity network effects matter, security network effects matter. And if you're not first, you're kind of last in that sense. And so I don't think there's a room for like a ton of different digital assets that just all become stores of value. I think it really consolidates toward one. And when you compare gold and Bitcoin, I mean, part of why I like both is because they don't perfectly fill each other's gaps. I mean, gold has got this multi-thousand year track record. It's obviously resilient to the types of things we've seen over the past week. But the key one is that it does debase at a fairly slow rate. I mean, it debases an average of like 1.5% a year.
It's not perfectly scarce.
Yeah, supply growth. And two, it's got portability constraints, which if someone's like living in the US and they don't really see themselves ever like having to bring physical gold with them somewhere, maybe that's fine, right? So if you're in the hunker down store of value approach, I mean, gold does solve a lot of problems. And that's why I'm bullish on it. And that's why it's it's a 20 trillion plus asset for a reason. Whereas, there's 200 countries in the world. A lot of people do move borders. A lot of people do have problems with their own jurisdiction. And people often do want to be able to move that value and audit that value quickly. Whenever a country tries to repatriate its gold, it's a multi-year process at the sovereign level to transport and audit it. It's kind of funny. And even just kind of institutional or large, high net worth. I mean, it's challenging to move that around between jurisdictions. And Bitcoin can do it, with a handful of confirmations within the hour. Or someone can fly around with 12 words written down hopefully generated with proper entropy.
Yeah.
But they can do it. They can even set up just multi-jurisdictional multi-sig and things like that. And that portability element is really interesting. I mean, and there's a spectrum of portability. I mean, gold is more portable than real estate, which is relevant, and Bitcoin is more portable than gold. And then Bitcoin has some, it's got that absolute scarcity aspect. But then, of course, it does have some questions that gold doesn't have. Quantum or security budget stuff, or just the overall kind of ability to technical risk, either of protecting your own coins or the network as a whole. It's a 17-year-old asset. So as I would phrase it, as long as it keeps being the leader in what it does, which is decentralized, portable, store of value, liquid money. That's I think the total addressable market of that is big. The question is how big, right? I mean, obviously the better UX is, the more robust it ends up being in the face of technological growth over the next 5, 10, 15, 20 years, the bigger that TAM is. Whereas the more frictions and problems that people run into, the smaller that TAM is. And I think the good news is that even if you reach half the TAM of gold, that's still a massive, that's a zero compared to the current price. And then the bulls would say, well, it's gold but faster. So why can't the TAM be bigger if a number of hard challenges get answered and defended against? So I do think that there's plenty of upside if you think it continues to be the best at what it does, and that what it does is worth something more than 0.1 or 0.2% of global assets, which I would put myself in that camp.
Put the two parts of Alden's argument together and the picture becomes considerably more interesting. The near-term Bitcoin story is not necessarily about calling the exact day of a market bottom. It is about recognizing when the conditions that created the sell-off begin to lose their power. If leverage has already been washed out, speculative capital has moved elsewhere, and sentiment has become deeply pessimistic, then the market can eventually reach a point where the downside becomes increasingly difficult to extend. But the real opportunity, according to Alden, lies further out. Bitcoin's next major wave of demand does not have to come from the same people who drove the last one. Some corporate buyers may return. ETFs can continue expanding access. And then there is the enormous pool of high net worth capital that currently has little or no Bitcoin exposure. If even a small percentage of that capital begins viewing Bitcoin as a legitimate portable store of value, the numbers become significant very quickly. And that is where her comparison with gold becomes particularly powerful. Gold has earned its place as a monetary asset through thousands of years of history. It is durable, scarce relative to most commodities, and difficult for governments to create more of. But it is not frictionless. Moving and verifying enormous quantities of physical gold across jurisdictions can be slow and complicated. Bitcoin attacks that problem from the opposite direction. It is native to a digital world, globally transferable, highly divisible, and capable of moving value across borders without physically transporting the asset itself. There are still very real risks. Bitcoin has only existed for roughly 2 decades. Its security model, technological evolution, regulatory environment, and long-term role in the global financial system will continue to be tested. Alden herself acknowledges those uncertainties. But her core argument is not that Bitcoin is guaranteed to succeed. It is that if Bitcoin continues to remain the leading decentralized, liquid, and portable form of digital value, its potential addressable market could be enormous. And if the market is currently entering a bottoming zone rather than the beginning of another structural collapse, the most important story may not be what Bitcoin has already done, but the pools of capital that have yet to arrive. So, do you agree with Lyn Alden that Bitcoin is entering a bottoming zone, or do you think there is still another major leg lower ahead? And if wealthy investors increasingly prioritize portable, scarce assets, how large do you think Bitcoin's eventual market can become? Let us know your thoughts in the comments. If you enjoyed this breakdown, hit the like button, subscribe to the channel, share this video with someone following Bitcoin and macro markets, and turn on post notifications so you don't miss the next analysis. Thanks for watching, and we'll see you in the next video.